Any of you guys interested in mobile home park investing? All right, so here's what we're going to try. Here's what we are going to accomplish today. Helping you guys make a decision. We're going to focus on mobile home parks today. Like, is this something I should play or something I'm just going to pass on? And so if you're going to play, like, go. If you're pass, it's not for everybody, but I'm going to help you guys lead you to a decision point so you can say, hey, this is what I want to do, and I'm going to do this thing, or I'm not. And so the way I'm going to position this is why I invest in it, why I chose yes to play, and why some don't. And I'll tell you, it's been a little over 5 years, 6, maybe going on 7 years, and I'm very glad that I did. 7 years, we've purchased 7 parks over that time, and I will tell you, not to brag or boast, like millions of dollars to my balance sheet and equity. I'm very grateful that I paused and said, hey, let me take a look at this. And I said, okay, I'm going to do this. So the question is, after doing hundreds of single family deals, I bought a mobile home park. It started with one. Why did I do that? So going back to that period of time, 6, 7 years ago, there were things going on in the single family market. And this is like where, as investors, like, we have to be astute and wise and see what's going on. And the single family market was just it was increasing, meaning prices were increasing and also competition was increasing. Okay. And so what we were continually to do each and every year was flip a lot of houses, buy rentals, do owner financing, all this type of stuff. It was becoming increasingly more difficult as the market continually got saturated. Okay. And markets do that. All types of different investments are like that, and everything is cyclical. And I'm like, well, this isn't, I want to build a sustainable business. And I'm like, if this keeps going the way it's going, it's not going to be sustainable. And I've got a family, I've got 5 children to provide for, I've got employees and teams and things like that. So like, maybe I should stop and take a look at some other opportunities that are out there that may benefit me and my family and my companies. So that was kind of the lay of the land right there. And I was fortunate. I had a friend we met at a networking event many years ago, and he was investing in some mobile homes. I think he had done 1 park at the time. Didn't talk a whole lot about it, but every now I knew he was doing it. But I'll be honest with you, I kind of put that stigma on it, like, mobile homes. I'm not going to do mobile homes. Like, who wants to do that? That's beneath me, kind of thing. A lot of people have that mindset and that stigma. I shared with y'all a few weeks ago about a real estate agent who was an investor agent, sent me a deal of a mobile home on land, and she didn't want to do it even though she flipped homes, and she didn't want to do the deal. And I looked at it and I'm like, yeah, we'll do it. You know, what do I need to pay you? You're going to sign it, wholesale fee, what have you? She's like, no, just take it. I don't want to do anything with it. I'm like, you sure? She's like, yeah. So we made 6 figures off flipping that mobile home, and that was her deal. So there is opportunity there. You're not going to make 6 figures on every single mobile home deal that you do, trust me, but it was one. So here's what I did. Given that place of like, okay, things are getting tighter, things are getting a little tougher, competition is increasing, I really started looking at my business model. My business model has always been, not always, I've done some luxury stuff here and there, but for the most part, like, my sweet spot is affordable housing. So I started like looking at like, okay, what is the problem? The problem is affordability. And that's a problem that was growing big time 5, 6 years ago. And it's not gotten any better. It's gotten worse. Taxes, insurance, inflation, all this kind of stuff. It's a big problem. So I started looking at what is affordable. Well, the government says housing is affordable if a family spends more than 30% of their income to live there. Okay, now houses are $400,000, $500,000, $600,000, $700,000, $800,000. Okay, people can't afford. Most people have a hard time affording their home, and they're way above this 30% mark. So they don't have money for anything else. I'm like, that's a problem. I was like, all right, so let's identify the problem, and more importantly, identify a solution. Okay, so I started poking around, okay, going online, reading blogs, all this kind of stuff. And there's a lot of information out there. And I started like looking at mobile home parks. All right, what's a good solution? It could be mobile homes. So this is what Forbes said. They're pretty smart. Mobile homes, lower cost per unit, lower cost for repairs and maintenance. You can spread out your risk, meaning if you're buying 1 single family home versus a park with 20 or 50 homes, demand is high, less tenant turnover than, say, for example, a single family home. There was a lot of mom and pop owners, which means you're able to negotiate better deals than, say, an apartment building that's not a mom and pop owner. It's shrewd investors like us that are not, selling at a discount. And there was less competition. Okay, there's less competition. So I'm like, these are really good things that you're not going to find these things with single family. You're not going to find them with multifamily. So I'm like, all right, let's dig a little bit further. And this was the biggest eye opener for me. This was like, all right, I'm going to play. And so everyone knows Warren Buffett. And so Warren Buffett was heavily invested in this space. Okay, heavily invested with large, at that time, I don't know now, but it was the largest shareholder of Clayton Homes, which was basically the largest manufacturer of manufactured homes. And he also was the largest shareholder in 21st Mortgage Corporation, which is the largest financier of manufactured homes. I'm like, well, Warren Buffett sees something here. I'm not that smart. He is. So sometimes we just need to follow the really, really smart people. But then the biggest eye opener for me came from this man here, which was Sam Zell, who recently passed away. And a lot of people don't know Sam Zell or never heard of him, but I call Sam Zell, he's kind of like the GOAT of real estate investing. Any real estate investment type that you can, asset class you can think of, he's invested in it and invested very, very well and very, very big. Single family, multifamily, commercial, skyscrapers, shopping malls, you name it, he's done it. He did it big. So the story, I read his book, and in his book was not about mobile home parks at all whatsoever. It's just about business principles and philosophy and things like that. But in his book, he told a story, and they were essentially acquiring a company. And this company that they were acquiring owned a mobile home park as a part of their assets. And so he called one of his guys into the office. He said, I need something from you. I need you to fly out to whatever town this is, go take a look at this mobile home park and figure out what we need to do to get rid of it when we acquire this company. Because obviously we don't want to own a mobile home park. Sam had the same problems that I told you about. We've got stigma, we've got stories, blah, blah, blah. But he had not yet investigated his stories to find out if they were true or not. So he sends a guy out there, takes a look at the mobile home park, comes back, and he's like, Sam, you're not going to believe this. And he's like, it's worse than we thought. And he's like, no, I've never seen a business model like this. Like, it's print and cash. There's low expenses, all these things. Like, I think you should take a close look at this thing. So long story short, they kept the mobile home park. They began focusing on mobile home parks. And over a period of time, this started in the 80s, became the single largest owner of mobile home parks in the country, essentially the world. And here was the thing that really got me. It was like, okay, I asked myself, I told myself, I'm like, after hearing this, I'm like, you would probably be foolish, maybe even dumb, to not do this. And it was this. So over the years, out of all the assets that Sam has owned and operated over the years, he sold off more than half of those assets over the years. To the day he died, fact check me on this though, at that point, before he died, I believe they had never sold a mobile home park. Just let that sit there for a minute. What does that tell you? Yeah, it's probably worth investigating, right? So I was like, all right, I just got to try this out. So I went and bought my first park. It was actually an RV park it was a mixed place, and I was going to convert it back to mobile homes. We didn't. We have a mixture there of some mobile homes, tiny cabins, and RVs. I don't typically recommend that, but in that property, with a lot of work and effort, like, it works really well. It's been a great, great property, and I absolutely love it. Love the community. What's that? No, it's in East Texas. That's in Longview. So here's quick mobile. When I'm talking about mobile home park investing, this is what I'm talking about, kind of 101. One, when you invest in a mobile home park, you own the land. You own the land. That whatever that land that park comes with, you own it. They ideally own their home. You own the land, they own their home. That's the ideal model. But in some of our parks and properties, we do own the home, and we either lease those out, but ideally, we're not really wanting to lease them out for long term. We want to do like a lease to own and eventually sell it. We want all the residents to own their home. That's the most ideal thing. What are we responsible for? We provide and maintain the infrastructure. Okay, that's the utilities, anything under the ground we take care of, or on the ground, like the roads, utilities coming up, sewer lines, electricity to the homes, but they take care and they're responsible for their homes, lighting, signage, things like that. If there's any common area maintenance, we would take care of that. We enforce community rules and laws. That's our job. And then I would also say that we create the community and the culture. And this is really, really important because there's a lot of mobile home parks out there and they look like the stereotypical trailer trash, right? They're downtrodden, all this type of stuff. This park that I was at in Illinois 5 years ago was like that. Very downtrodden, worn down, no money spent on this park probably in decades. Now we've turned that around, right? And so last week I was there and she's a school teacher and she moved there 2-3 years ago. And I got to talk to her again and hadn't talked to her in a couple of years. And she told, we just so happened, we brought in 4 new homes last week. One of them was a 4-bedroom. I was talking to her and she was like, I didn't know you were coming, but I kind of feel bad, but I was looking for another place to move because my daughter's having a baby. We need an extra room. And she's recently was divorced, all this kind of stuff. And she's like, I was pricing homes in the area, and to get a single family home around here is $2,000 or more. And it's not better. She's like, it's not better. So she was like, I really want to talk to you about the 4-bedroom. And she was just, and her and many, many other people there during my visit last week, they're like, we love it here. We feel safe. This is great. We appreciate all that you're doing. It wasn't like that back then. We had pedophiles. We had bad people. It was not good. But now this is the opportunity where I'm very happy with my asset. And I'm also very happy that my residents are happy, right? And it's affordable, all these types of things. So that's what we do, is we need to create the community, which may be a pass for some of you, because at times this is not easy when you're doing a park turnaround. So I was in law enforcement, so I don't really, like confronting people and dealing with bad people. I kind of enjoy it a little bit and want to kind of be like the superhero to like make sure that everybody in there is like within standard, playing by the rules. So I kind of enjoy that piece of it and really feeling good about what we're doing. So that's my mobile home park investing 101. Everybody got that? That's the business model in general. So here's why I play. Here's the big 3. So it's cash flow, not speculation. There's a limited and decreasing supply. I'll talk more about all 3 of these in a minute. And they perform in tough markets. They perform well in great markets too. But I think it's wise to have investments that, whether it's up or down, you're still good, right? Because a lot of people, like, certain investment strategies are going to do great in certain markets and terrible in other markets. To me, I don't want to play that game. So it's not about chasing appreciation, okay? Because everybody like buys rentals. Oh, I hope the market's going to go up. There's a lot of people in single family that I hear, and I hear people, I talk to people, have a lot of conversations. I'm like, have you really thought this through? Right? And so if you're just betting on appreciation in the market coming up, you may be in for some unfortunate circumstances in the future. Like where I'm saying I believe single family values must come down, and they will come down. That's my prediction. So this, don't care. It's built on cash flow. So number 1, income over speculation. That's the foundation. We're looking for cash flow. Okay. So the value of your property, it's based on that income. It's not based on an appraisal. It's not based on what another home sells down the street or anything like that. It's based on what that property is doing. So monthly cash flow also, what is that, is real. That it's like gold and silver. Like that's a real asset. Cash coming into your account each and every month is a real return. You're not hoping, it's predictability. Okay. And unlike, I flipped a lot of houses, hundreds of houses over the years. And there's always like, man, I hope this sells. I hope I find a buyer, things like that. You're waiting and waiting and waiting. It's those things, like those aren't really at play in here because we've got income. You need income. If you don't have that income, you're just guessing. And we're not playing a speculation game here. We're basing it on cash coming in each and every month. Number two, supply is constrained. In the world of real estate, I don't think you'll see anything else like this. I don't think I'm hyping this up too much. But Warren Buffett always talks about when he's investing in a company, if he's investing in an industry, he's looking for what's the moat. Y'all know what a moat is? Like the old castle, the kingdom, they would build a moat around it, which is like a little river, what have you, to protect themselves from intruders. So that's a moat. So mobile home park investing has probably one of the greatest moats in real estate. And it's this: the supply is not increasing, it's decreasing. So we can look at single family, multifamily, commercial, whatever, and the supply is increasing in all those. Okay, which when there's an increase in supply, there's a devaluation of the asset, right? And we have no control over that. New parks are rarely approved. Well, some people are like, oh, well, that must be a bad thing. People don't want to do it. It's not true. New parks are rarely approved because cities don't want them. Cities do not want to approve permits for mobile home parks. That's number one. Okay. Why is that? Is there a stigma aspect? Yeah, but that doesn't matter. This matters. Okay. Most cities and municipalities will lose money on a mobile home park because they can't generate enough tax revenue, because if you've got, 20, 50, 100 mobile homes and they've got 2.5 kids at each mobile home, that's a lot of money in education, right? And other expenses that's not going to generate the revenue. So they don't want it. Cities, just like a lot of people and like our country, is broke, is bankrupt. So they don't want to approve it. And to be honest, if you're looking to develop a mobile home park, it's not something that I personally advise. And especially if you're doing it in a city area and you could get permit approval, there's some instances that may make sense. But I've been mentored by one of the largest owners of mobile home parks in the country. He's like, I've never developed one. I never will. Here's my reasons why. And it's because it typically doesn't make financial sense. Because let's say we had a plot of land here in Houston, it's probably going to be more financially viable to build up like commercial apartments, things like that, than to build out. So demand keeps growing. Why? Because affordable housing is in more demand. And now you've got mobile home parks that are kind of like dinosaurs, right? They're dying. So the less that you have makes them even more valuable. Does that make sense? So limited supply plus growing demand, that's the place you want to be. So, and this just kind of, drives home that point, is like virtually every major city in the U.S. has effectively banned new construction on mobile home parks since the 70s. As a result, there are only roughly 10 built per year in the entire nation. While there are many times that down each year, torn down, many times that are torn down each year for redevelopment. That's created an environment in which the total number of mobile home parks in America declines monthly. This is an important piece that was huge for me versus the red ocean, which was single family, all these sharks, all these people coming in, versus a blue ocean opportunity, which is a less competitive opportunity. So I'm like, I think I want to go to a blue ocean. Number three, they performs during times of inflation, which we've been experiencing for a long, long time, in times of uncertainty. Since going back to 2008, there probably hasn't been a greater time of uncertainty than what we're in right now. And my parks are pretty much full. And if we have something that's vacant, it gets filled up really, really quickly, like really, really fast. The 4 homes we brought in last week at this other park, we've already got waiting lists of people that are wanting those homes. Okay. So that's why it works. Rents adjust with inflation. I believe also rents are going to be coming down too. They're already coming down. Rents are already starting to come down. Everything cannot always go up. So rents are starting to come down. And rents do adjust with inflation, though. As government prints money, things go up. Our lot rents, things like that, they go up as well. As things go up, things become more expensive, food, fuel, family needs, medical, all those types of things. So affordable housing becomes more in demand. Remember the 30% thing of like, this is a percentage of your income. Debt gets cheaper in real terms over time, meaning our debt as the investor will get cheaper over time. Okay, as there's more inflation, there's more money printing, that debt is now, it's cheaper today, or it's cheaper today than it was 5 years ago if I borrowed at that. And there's the potential to, inflation's continuing, higher rents, and then our debt either stays the same, meaning like we have bank debt, or there's opportunities to refinance during certain markets. So we can decrease our debt over time whenever there's an opportunity to do that. Okay. And that is the assumption that you have long-term fixed rate debt. You don't do the variable interest rate thing like a lot of people did with multifamily 4, 5, 6 years ago. They're in a world of hurt because interest rates have adjusted, right? So quick, explanation on this. What we do is we buy our parks with private capital. Okay, I will raise money, we'll buy the park, bring in homes, stabilize it, then go refinance with the bank with long-term financing. And then we'll wait and see, okay, we're at 6.5%. Can we get 6? Can we get 5.5? Can we get 5? So we'll play that game to decrease our debt while rents are what? Consistently going up year over year over year. Mm-hmm. Yep, absolutely. Mm-hmm. Yep, absolutely there is. Okay, so when things get tight, right? So that demand for affordability increases, and that's what we want. We've got the supply of the homes, the houses, and demand is increasing. Those are like the main reasons of why I'm like, yes, I'm going to do this. So do y'all want to go ahead?
Say that is someone that started up, someone that's like already like just more stability, or just someone that's like ready to get more profit, a little bit more risk.
The question is like, could it be someone who's just starting out, versus like, man, should I do this for single family? Absolutely, you can. Absolutely, you can. There's a learning curve with anything. So even with me doing, with my background and just jumping into it. So when I jumped into it, I went to basically like a weekend boot camp, got some education, and 2 months later I was under contract on my first one. And there was still a steep learning curve for me. There's things I didn't know. There were things that were easier, how to manage contractors, how to do, basically do construction management, project management, because you're managing a project. So people have already done it. So I know that it's true. It's going to be easier for some people that have experience managing teams, managing contractors, building a business. Because this is when you buy a park, you're a freestanding business, right? It's not just a property. A property is like a one-off transaction. This, like, you really are building a business. So you can, and most people, anything that they put their time and their focus on consistently over time and are really committed, they absolutely can. They absolutely can.
I'm not sure if you can talk later about the financing side, like what are the benefits when you finance the park, how hard is to get that, because I know a lot of it will be at all.
Yep. So that's not a part of the slides, but when it comes to financing, they're looking at your financials. Okay. They're looking at your financials. They're going to look at your income. They're going to look at your expenses. There's appraisal that is going to be ordered, but the appraisal is based off your income and your expenses. Okay. So that's going to be the main thing. The financing in the mobile home park world, like a lot of the big banks that I would say either specialize in mobile home parks or just commercial in general, a lot of your big players want like $1 million or more. They don't want to originate loans less than $1 million. Some of the smaller parks, then you just got to search out lenders who will loan on those, and they are out there. So the first park that I did, I bought that one for $385. We spent close to, at that point in time, we had spent about $400,000 in improvements to the park, bringing in properties, different things, roads, infrastructure. So at that point in time, we were about $800,000 into it. Okay. And this is going back to, I think I bought that park in 2019, and I was doing my refinance midway through 2020 when the financing market was like And so I was approved for $1 million loan, cash out refinance. I was going to cash out over $200,000, pay off all my private lender debt. And they said they hit the brakes and they said, we can't do a cash out refinance. We're not doing cash out refinances right now. We got to pull back. But then they said, well, my appraisal came back at almost $1.5 million. So they said, here's what we'll do. And this was a credit union. Okay. They did not specialize in mobile home parks or anything like that. But they said, here's a 1.5 appraisal on a property that, has $800,000 in debt. They said, we'll loan you the $800,000. Okay. And that was at a little over 5% interest, 20-year ammo, 5-year balloon. And then they said, but what we'll do based off the asset of the property, and it also, long story, but it had 40-something acres also of land when I bought it. They said, we'll give you a line of credit for $750,000. And I'm like, to me, that's more valuable than the $200,000. So I've had that line of credit and I use that for lending and other things. So that was one scenario. Then the second park that I bought for $100,000, and it was a 15-lot park. And we spent about $300,000 renovating that one, bringing in homes, A few years later, $400,000. If you go to a lot of the big commercial lenders, they don't want to touch it. But I found a local bank. I said, here's my park, 15-lot park, full of occupied, nice roads, nice and clean. He's like, I like it. Ordered a local appraisal, refinanced it, and done. So sometimes you just got to search them out on the smaller ones. It is typically that one did not, but a lot of them do. So I would encourage you, look for some that do not. But if you do, because I think a couple of mine are. So to me, also my mobile home parks are a wealth play. Okay. So I'm okay with paying 15, 20-year max, 15-year amortizations to aggressively pay those down. So if you did get to the end of 5 years and there's an adjustment in your interest rate, then you're decreasing your principal along the way. So you should be good. You're raising rents, but you want to look for the long-term financing.
And how flexible are the banks? Like you said, the ideal scenario is for you to own the land and to start finance maybe the mobile home channel. How flexible is the bank to release the mobile home from the loan? When you do the loan, maybe you have 20 homes that's owned by you, and then you want to kind of sell one by one to the tenant. Are they flexible with that?
Yes. So your more astute lenders, they actually don't want you to own the homes. It's more ideal if you do not own the homes. Okay. Mobile homes in themselves are depreciating assets. They're not increasing in value typically, maybe for a short period of time, and then they start going down. So it's more ideal if you don't own the home.
Is that something you try to do before you refinance? Kind of doing your private lending?
Not necessarily. It's something we just try to do already, but when we're ready for refinance, I've got one coming on 4 years now, another one. And I promised my private lenders I'll be out this year. I was waiting for Jerome Powell to be out as Fed chairman. Interest rates are going to drop. And now here on war and all that. And I was talking to him. He's like, you still going to refinance? I'm like, I told you I would. So I'm going to. And I have a few rentals in there. But no, I'll take it to the bank. Here's my financials. And you got a question? Okay.
For your first one, you said that creative writer, what's the cash flow?
So where we're at today, we're hitting months. We're over 20K a month in income, over 20K a month in income. And that one also, it's kind of a little bit of a different story in itself, but location does matter. I haven't talked a lot about this, but location does matter. Where I've said a lot of cities won't allow permits for new parks. If you start looking for these parks, you'll find some they're in middle of nowhere towns, small towns. You got to have demand for housing. Okay. And so that particular park, you've been to it when we did our bus tour, and it's right off a major freeway. And then what we started doing because there's a lot of RV spots there, and RV spots, I don't like RV parks, to be honest with you, in general, because RV parks, there is an increasing supply. You can drive around and see like RV park, and they're popping up because people think they're cool, they're hip. I want to have an RV park. I don't want that. I want long-term folks who want to live there for a long, long time. And so that particular park, Vivian's heard the story. When I went to it, that's the very first one I bought. And I was looking for a mobile home park, and a broker / wholesaler brought that deal to me. And it used to be a mobile home park. And I was like, okay, I'll just convert it back to a mobile home park. All right, I'll go. So I made the drive to Longview. And I'm like, all right, I was going in with that mindset. Okay, what's it going to take to convert this from an RV park to a mobile home park? I wasn't going to tell this story, but I'll tell it. And so I went to meet the seller. And the funny story was, I live in Richmond. He lived in Richmond. I didn't know this. And so we had probably been driving along each other that morning to meet. So we get to the property. And while it was primarily an RV park, he had a few mobile homes, and he had some tiny cabins there. I think he had 4 or 5 tiny cabins. So we get out of our trucks, we meet, let's take the tour. All right. There was a single family home too at the front. His daughter and son-in-law lived there, and they ran the park, mismanaged the park, I should say. So I'm like, all right, let's take the tour. So we walk, and the first home is a tiny cabin. I didn't know anything about tiny cabins at the time. And I said, okay, tell me about lot number 1. He's like, yeah. He's like, me and my son-in-law built this out. He's like, we bought the building and renovated it. It's a 1-bedroom, 1-bath. It's like, okay, tell me about, the tenant. He's like, well, I forget his name at the time. He's like, he's lived here for 5-6 years. I was like, okay, that's good. What does he pay? He pays $700 a month in rent. What was your total cost for this building? $15,000. I was like, okay. So the building paid for itself in 2 years. I was like, okay, we're off to a good start. Go to the second building. This was a small metal building. And I'm saying small. Tell me about, I thought it was a shed. I'll be honest with you. I'm like, is this storage? What's going on? No, Carl and Carrie live there. I'm like, how long have they lived there? 6-7 years. What do they pay a month? It was like $550. What did this one cost you to build? Like $12,000 or $13,000. I'm like, this is going good. Then we get to the third lot. The third lot was an RV. The third lot was an RV, and it had he had a metal cover over it, and you could tell this guy had been there for a while. Tell me about this one. He's like, well, that's Tater. Can't make it up. Those guys went by the name Tater. And I'm like, well, tell me about Tater. He's been living here about 11, 12 years in the RV. I was naive. I did not know people were doing this. So he took me through the tour, and there's these people, that were living there, been there for many, many, many years. It was like an epiphany moment. I just didn't really think of this. So I'm like, all right, I need to relook at this thing. And it wasn't completely downtrodden, but they were not spending a lot of time, energy, and effort in building the community here. Why do I say this? When I pulled up to the park where his daughter and son-in-law and the home they lived in it's a very nice home, brick home. There's a bunch of beer cans out there. And that's right when you're driving in the park. And then they had a bulletin board. I didn't discover this till after I closed on the property. They had a bulletin board, one of those bulletin boards with plexiglass, and they've got community notes. This guy had owned the park for almost 5 years. Okay. The guy I bought it from, and he bought it from the previous owners. I cannot make this up. So I close on it. I'm going up there. We're starting to pretty it up, do all these type of things. And I'm looking at the bulletin board, and there's a bulletin about something, something, something. And I look at the date. It was dated before he bought the park. Long story short, at that point in time, we went from a place of where it was like $7,000 to $8,000 a month in revenue, hit another plateau of $10,000 to $12,000, $15,000. But now we're consistently around $20,000 a month. And we're not even fully occupied at that one because there's a large percentage of RVs. So we're dependent upon those. So we started doing Airbnb. So now we have 4 Airbnbs there that do really well. Really, really well.
Any attraction or people come to work?
It's around Interstate 20. It's on Interstate 20. And not to go too much into Longview, but that's kind of like a unique advantage to that property. So when you are looking at properties, you look at supply, you look at demand. To drive into Longview, to like the city of Longview or the cities, hotels, and all that kind of stuff, it's about a 20-minute drive. But we're on a major interstate. And so there's a lot of people that come there for work, travel, family. There's not a lot around there except the major interstate where all the traffic is. So our Airbnbs stay pretty booked. We'll probably have at least 5, maybe 6 or 7 where we're going to fill all the Airbnbs, but they do really well. So that kind of changed my mindset of like, okay, let's look at solving the affordable housing problem. And for some people, it's living in their RV and just paying lot rent. So at the time, he was charging about $300 a month in lot rent. We're close to $400 now in lot rent. We've repositioned the utilities. People pay for their electricity, like all bills paid kind of stuff. That's the kind of stuff you have to work through too. And that's how you get your appraisals, right? What are your expenses? Your income is your rent, or if you do some Airbnb, things like that, but it's your rent, that's your income. What are your expenses? A lot of these mom and pops have all bills paid. Okay, so you got to tackle that. If it's electricity, no, we got to bill back to them, remove that expense from our balance sheet, if you will, from our P&L. Water, they got to pay for the water, bill that back individually, sub-meter, things like that. Trash, is there a way to get the residents to pay for their own trash? I don't want to pay for their trash, it's their trash. So there's things like that that we have to manage. Here's some of the reasons why people pass on this. It's not for everybody. Like I will tell you, it's not, I would say it's probably not for most. I say love it. I love my family and my kids, but I really like in terms of investment, it's definitely for me. But the management can be operationally heavy. If you're just starting out, if you've never had a rental portfolio, it can be management heavy because you're building a business here. So you've got to manage your existing tenants, setting up that system, rents, leases, all that kind of stuff, setting community guidelines, enforcing those, managing those, screening new residents, dealing with things with background checks, people who are sex offenders, criminal histories, all that kind of stuff, dogs running loose. There's some management stuff that you have to figure out here that's not easy, and at times it's downright hard. So this tenant base, it's going to require strong systems because every community, like, is a community, is a culture, and they're looking for weakness at times. So there's people trying to get over on you, and they do talk. So they do require strong leadership, if you will, and you got to have your you-know-what together. Like, some of these folks are not, they don't care about your bottom line, and they're there to do what they're going to do, like make your life hell if you're not running things the right way. The infrastructure, water, sewer, roads, all that kind of stuff, if you don't know what you're doing with managing those types of things, then there is real risk there. I remember when I first started buying parks, I'm on the phone, wife and I are driving, people are calling me, and my wife's like, when you're talking about parks, she's like, all I hear you talking about is like water and sewer, like that's what you talk about all the time. I'm like, well, it's the main thing that we have to do and figure out. And one of my parks, the very first park I bought, was on a water well system and a septic system. I don't advise that. You want to look for public water, public sewer, but I didn't know what I didn't know. And there's been a big learning curve having to learn about the TCEQ and water quality and testing and all this kind of stuff. And there is real risk there. Okay, there is real risk there. So that's a risk that you have to understand, get educated on, and navigate around that. That park that we bought in Illinois, for example, and luckily, if I was just starting out with that one, I would have got burned pretty bad because they were coming at, the original asking price was around $300,000 over the course of a year. It's a long story, but we ended up buying that park for $95,000. I shared it on that webinar last week. But we discovered that all the water lines were basically shot underneath. Like this park was just pouring out water all the time. And so we had to spend close to $100,000 to replace the water lines. So if I had not known to do the feasibility and the investigation that I had learned, then that would have been $100,000 hickey that I didn't want to take. So we were able to negotiate that. So there's some things you got to look for. It's not sexy as other classes. It's cool to say, own apartment building or some commercial building or whatever, and your little selfies on social media look a lot better for some people. But for me, man, I'll do a selfie right there with so for me, like what's sexy is a good looking P&L and a balance sheet and a net worth that is growing over time, while at the same time people feel good living there. So to me, that's more sexy, but a lot of people don't even look at it because of that. And so really, like, this is a business. It's not just a property. So can you do it starting out brand new? Yeah, but understand what you're doing is like you're running a business. Like how many people go into business for the first time and they're, open up a restaurant or whatever, some kind of franchise? Like that's a lot of work, and you figure it out. So to me, this is much simpler than that. It's much simpler than that if you take a little time to educate yourself. So that's the approach I've taken, is like just like thinking of this thing as not like as an investor, but really an operator. Okay, what's it going to take to operate this thing? So when you're negotiating, very conservative underwriting, you buy for cash flow first. So I talked to so many people, and developing something is pretty sexy, I would say. Like people like, man, and they've got this big vision of like, I want to develop this and buy this land and do all this stuff. And I've done a little development over the years. Like we've bought homes, we bought a partially developed subdivision, turned that around. I hear development, and so development, there is a big upside, but also I hear there's risk, okay? And there's a long delay before gratification can come. I like low risk, high reward. And that's the beauty of buying mobile home parks, because I'm not going to say you're going to be like, huge cash flow in the beginning, but most of these parks that I've acquired, we're break even day one, because that's how I've negotiated the deal. Like, hey, let me safeguard myself. If I'm breaking even day one or positive cash flow day one, and I have no money in, I can raise 100% capital and be break even or positive cash flow day one. What does the future look like? It looks wonderful. It looks wonderful. So that is what you're looking at. First and foremost is like, I want a cash flow. Not 5 years from now, you're 6 months. No, I want a cash flow right now. Because what have I done? I've reduced my risk, drastically reduced my risk, right? And that's a sustainable business model. So that really is the goal. I want to break even day one. Tell me other businesses where you can do that. Tell me. That's been my approach. That's been my approach. So what that means is I've said no to a lot of deals. I said no to a lot of deals. Going back to the one in Illinois, that store was, they came to us and they were working with my acquisitions. He got the lead. Hey, are you interested in this? They want $325,000, whatever it is. I'm like, and I'm wanting to acquire. That's when I was like really, really looking for parks. And I was like a little bit too overexcited. Okay. Keith Cunningham calls it irrational exuberance. Like you get a little irrational when I see people, they do deals like this all the time. So they go out of some boot camp, they get some training, and they just want to do a deal. I was kind of in that state, but it's too much, it's too far, and it's too small. And I'm like, I'm going to be disciplined here. You got to tell them 325 is too much. Okay. Deferred maintenance, they were at 50% occupancy. It's too far. It was in Illinois. Okay. 16-hour drive. And last week, it was a 40-hour, it took me 40 hours to get home. It took me 40 hours, like flying. I had multiple, it was a nightmare. I slept at the airport all I could. I slept like 30 minutes. I made it home Friday. I left my Airbnb Thursday morning at 7 a.m. I walked into my door Friday night at 11 p.m. It was not fun. But so when that deal came, it was 325. I'm like, it's too much, it's too far, and it's too small. Okay. The risk, the reward, the effort didn't make sense. They owner finances somebody. I had a call. I'm like, owner finance, local investor. That's what I would do if I were you. Get your price. So like, I think you can sell it for 325 to somebody. Like it's not a good deal, but somebody will buy that. I found somebody, went bad immediately. He didn't pay, didn't do anything. So they called 3 months later. Hey, we'll sell it for 250. I said, too much, too far, too small. 3 months later, they call back and they're like 225, too much, too far, too small. They came back 185, maybe not too much. Still a little far, a little bit small, but I think we can look at that. And so we went into contract at that, did our feasibility, found out things about the sewer lines, all that kind of stuff. I'm like, it's still a lot of work. Still a lot of work. Long story short, 135, 125, we got down to 95,000. And I'm like, it's not too much. I can deal with the too far thing. And for 24 lot with a park, with city water, city sewer, right in the city, I'm like, let's do it. So you negotiate them. So all my deals have not been as dramatic as that, but so also we don't want to compete with the big boys. I don't. If you go into parks that are 100 plus lot parks, you're competing with the big boys. One of our mantras in my company is like small but mighty. And so I've kind of made it a point where, do I desire to have a bigger park? Yeah, we will. I think we will when the opportunity presents itself. But I'm like, there's an opportunity, blue ocean here. The big boys don't want to invest here. Most investors that I compete with in single family, they're not going to invest there. I have very little competition. So 15 is a little bit small unless you're buying it cheap. And y'all want another story? So the second park that I bought was complete irrational exuberance, where I had just bought the other one, and a month later that deal came in, and it was very close to that one. It was an hour away, also in East Texas, and they were asking $150,000 for a 15 lot mobile home park. And I found that deal, contacted the seller, said, hey, I'm going to buy your park. I haven't seen it. When can we meet? And they said tomorrow. I'm like, got my truck 5 a.m., met them at 9 a.m., gave them a $5,000 earnest money check to buy it for $150,000. Got on the phone with, I call him my mentor, someone who was taking my phone calls and like owned a lot of parks. He was like, what are you doing? Like, it's too small. Don't waste your time. I'm like, but it's $150,000. If it's cheap, it's good, right? And a lot of people have that investment mindset too. Oh, it's just cheap. I'm like, man. So I started looking at it. I'm like, he's probably right. Like, where's the upside in this thing? So I went to the sellers. This is after a week or so. I went back and forth, and the sellers were very nice, very sweet. And I said, hey, I've got a problem. I'm not going to buy your park. And they're like, what do you mean? And I'm like, I'm really busy. I was a little too excited, and I really like you guys. But here's the thing. You can definitely sell your park for $150,000. I think you probably sell it for a lot more, to be honest with you. I think you probably sell it for $200 if you're a little bit patient. And like, we don't want to be patient. We want to sell it now. We want to sell it to you for $150. And I said, I can't do that. I'm not asking for my earnest money back. Keep my $5,000. That was my mistake. And I'll even try to help you sell it. Some people. And like, we don't want to do that. We want you to buy it. And I said, I'm sorry, but I just can't. It's not going to I don't have the time. It's not going to make sense for me. Long story short, she called me back a week later. Would you buy it for this price? I said, no. I'm like, don't sell it for more. Sell it for more. And she did the same thing as other sellers and came back. She's like, would you buy it for $100,000? I'm like, when do you want to close? So, well, that's the difference with mom and pop owners too, right? When you're negotiating with them, because a lot of mom and pop owners who've owned properties for a long time, one, they're burned out. They've been managing it, doing all themselves. So number one, which is motivation. And then two, a lot of times they're older, and so they value their time more than money. Okay. So and who was I competing with? Not a whole lot of people. So I ended up taking that one down. And then several others that we've bought in East Texas have been similar stories, where I'm dealing directly with the mom and pop owner. I'm able to talk to them honestly about my numbers, and I negotiate like, this is where I have to be based on the condition of property. Someone will go, well, it could be this and it could be that. And I'm like, yes, but that's the value add. And that's what I'm going to do. I nicely tell them, you haven't done that. Right. So that is, for me, the opportunity is like the mid-sized parks that are somewhere. I say typically no to 15 is small, but what I've learned, so 15 to 50 is a really good sweet spot. But what we didn't know at the time was how to manage them. That's where a lot of people can't figure out. But we figured out that piece where we manage all of our parks remotely. So where a lot of people will have to either manage it themselves or pay a lot of money for management. I have a VA team that manages my parks, and we have a local person, eyes and ears. Hey, can you check on this? Can you do this? Not much. Not much. It's like they wanted, like the lady last week, she's like, she's like, it's so good just to have a good landlord. She's like, I was dreading the thought of having to move because I like having a landlord and people that we trust. So not necessarily, but a couple that we do. There are a couple parks that we do depending on, there's one park that's kind of a little bit more management intensive, and we do give her free lot rent. Okay. My RV park, I have a full-time grounds manager there, and he oversees some of the other part. He goes and mows the yards and things. So you've got to find some economies of scale there. Landscaping, stuff like mowing the yard, that's something you got to take care of. But we did buy our first robot mower. Did y'all see that? Because the mower broke down. I went to go visit the park. I'm like, dude, what's up the grass? He's like, I know you're going to be on my ass. So he's like, but the mower broke down again. And our brand new John Deere mower that's less than 2 years old was broke down like 3 times this year. So I'm like, dude, we got to buy a backup mower. Like, we got to have 2 of them here. Like, you got to have a mower. So I'm going online. Like, we have a robot mower there. So pretty freaking cool. Pretty soon we'll have like robots managing the park. Pay your rent. Pay your rent. No, but we can do that. Let's do it. You got to go to East Texas, though. I don't have any near here. My closest one's an hour away, and then the others are in East Texas and Illinois. But that's what. So the other thing, like me, is like you have to improve operations, because even though it's a mobile home park, is one. Even you have to improve operations. Okay, so then that's the other thing too, is that if you just go in with this slumlord mindset, investor mindset, like you have to create that community, keep things clean, green, while at the same time increasing expenses, which increases your NOI. I've already mentioned utility billing, transitioning that from the park paying utilities to the residents pay for utilities, and creating value, either refinance or sell. I've kept all mine except for one. There was a small one, the really small one that we owner financed to a local operator. And that another one's really small. That's the only one I've sold. So I'm not selling them. So yeah, that's why I like it. You're not chasing deals. You're building income producing assets with the long-term approach. They can break even or cash flow from the beginning. And then you can just increase that cash flow and value over time. And that's it. That's one of the most solid strategies I've seen to create and build wealth and income at the same time. So that's it. So once again, register now. Come out to the event. Go for it. So that's a good question. So it depends on the interest rates at the time, but your smaller parks are in the 8 range. Your big parks, they cap them like apartment complexes. Or some of if you've got your nicer parks that are 100+ lots, paved streets, all that kind of stuff, like your really clean parks, they'll 4 cap them. When I'm looking at them, usually it's like, okay, 10 cap around that range. Like I want to be able to, raise capital with my debt and break even. But if it's a nice, clean, even smaller park, yeah, around the 8 cap is a safe range to look at. Yeah, or even 12, more. That's the goal. That's usually where I start my offers and my negotiations is around 12. And it's difficult because some of these people I bought from, it's like they don't have financials. They don't have bookkeeping. Like it's. If you're a real estate investor, real estate agent, and you're just stuck, and you're like, man, my business isn't doing what I want it to do, what I believe it can do, and you're ready to launch and go to the next level, then I encourage you to hit the little QR code. Let's schedule a time to talk and get you on the right track or back on the right track if you're off track. I run a group coaching program that's called Wealth Passage. I also consult and do training and helping people one-on-one. Also part of the Wolfpack with Ben. So if you're an agent as well and you're looking to go down the path of being an investor agent, which I encourage every agent to do, reach out, let's connect, we'll schedule a call and get you ready to launch your business, go to the next level. This is a world of uncertainty right now. And I'm telling you, there's no better time to invest than when there's a world of uncertainty. This is when opportunities start to come, and they're coming. Here we are. So let's take advantage of it. Thank y'all. Sorry, not sorry. I really love talking about mobile home parks, and so hope y'all got a lot from that. I thank y'all for coming out in person, online, and we'll see y'all here next week.